It's a phenomenon that's perplexed economists who believe markets should behave more efficiently. And it isn't limited to gold. September is also commonly the worst month for U.S. stocks, with average declines of more than 1.5% in the S&P 500 over the past decade.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. Hope you had a good Labor Day. It's Tuesday. I'm Vince Lanci. Today, we will discuss on the morning market rundown, sell season, the press's newfound fascination with it, and our explanation, which will make the next 2 months infinitely easier to navigate. And the WGC, World Gold Council's recent report advising Swiss pensions to dump bonds and buy gold. That's a really significant thing. These two stories in balance. One is short term, that's the sell season, buy season concept, and long term, that's the World Gold Council concept. Before we do that, however, let's look at the markets. The dollar is up 16. 10-year yields are unchanged. The S&P 500 is down 32. The VIX is up 16 and a half at up 99, up basically 1 point. Gold is vacillating between down 4 and up 3 at 24.97. Silver is 28.37, weaker despite the margin reduction by the CME. And the premium collapse, it would seem, in Shanghai has the bigger effect on the market right now. Copper is down 11 cents, 2.81% at 404. So given the sell-off in copper, this is not bad for silver. And now that I think about it, the Shanghai silver premium is dropping. Copper, which is a Chinese focused commodity, is also weaker. This is China-based, at least in part. Gold, silver is up 44. WTI is 73.20, down $1.60. Nat gas is down a penny. Bitcoin is down 100 at 59 and change. Ethereum down 31, 2,500. Platinum down 17. Palladium down 9. However, the palladium platinum thing is just outrageous now, right? Grains are, what are grains? Grains, soybean up a penny at 10.21, corn down a penny at 3.86, and wheat 5.48 down 3 cents. Okay, if you look at that grid there, that's you should be able to eyeball these quickly, right? That's a deflationary grid. And specifically, it looks like it's being caused by slowdowns in the East. Demand for oil is down. Boom. Copper is, in the toilet, right? That's China. Natural gas, you can't really look at. Gold takes it when everything else goes down. Stocks are down. The dollar is up. So this could be, first glance, no deep analysis, this could be China-based. I have to look at it a little bit closer. Okay. However, I want to look at these lines for you, right? That yellow line there, that's Michael Oliver's, 8-year trend line going down back to 2015. There's a big channel, and he's saying we're above it. And it's a monthly channel, mind you. Don't look at it on a day-to-day basis, but it's been holding. It's pretty cool. These lines I'm drawing here, below here, the market should sell off, and it refuses to give us a daily close below there. Below here, it should sell off, but it should stop in this area. Okay, so my feel for this market right now is we're range bound, having been capped by the BIS, and this cap wants to get us lower so someone can buy. But right now, it's been stubborn in this area. So if we get above here, before we get below here, it could be a rocket ship. I'm not saying it's going to happen, but that would be something to behold. All right. We have several gold items to talk about. We're going to try and cover them quickly and give you uh, where to go to get more on them. Okay. Premium analysis is the Swiss gold demand will uptick. And the news is sell season starts, as the title says. Here's the front page. There is the Swiss pensions story about gold that is, I think, extremely significant going forward on multiple levels. We go into that in detail in the actual post. Hartnett's Flow Show, which comes out almost weekly. He doesn't talk about Zoltan per se, but he talks about everything Zoltan did 2 years ago, and it looks like we're in the potential beginning of a commodity crisis part two. Destinies of gold in China's RMB. There's a lot of stories in here, okay? Just go to the homepage and you'll be able to see them. Premium analysis, the Swiss gold story. All right. There is a problem in Europe stemming from a dogmatic belief that bonds always reduce risk. The last 2 years proves otherwise. Smart banks like UBS have been telling clients to be careful. Now the WGC lays the whole bond as safe haven fallacy bare in what amounts to a statistical mandate for pensions to buy gold and sell bonds. There's the link. There's the title. We have a big portion of this unlocked. It's very compelling. And the thing is, it's coming from the World Gold Council, which, as a gold person, gold people know that the World Gold Council does not exist to make gold go up. It exists to, I don't know, to convey news that it's been told to. But that's the key. It's conveying news that it's been told to. Anyway, really good report. Sorry to do that to you. That story was also featured in JPost under WGC. Swiss pensions should swap bonds for gold. So you can go there. Swiss pension funds are facing an increasingly uncertain economic environment with inflationary pressures, geopolitical risks, and the end of an era of low interest creating challenges. In this context, gold emerges as a strategic asset that offers diversification, risk management, and potential for long-term growth. All of this written by yours truly. Let's take a look at what that looks like on their site. That's a nice picture they put there. And these are all the charts that we put here. So you can see that more there, or you can see it on our site. Let's talk about Bloomberg and sell season. Love this. For the last 15 years, I've been trading something that I would call the seasonality in gold. And the seasonality in gold is not about crops or growing or mining. It's about demand. It's about mechanical demand as tied to tax season and tied to the fiscal year for funds. Now, in 2020, I finally came public with it in an opportunity with Daniela Cambone in an interview. We have that interview on here for you to see. And during that interview, I laid out buy season and sell season. And of course, other than the people that care about gold, the mainstream media didn't care much about it. And that's fine. But anyway, here's what sell season is. And sell season is what you're going to hear come out of mainstream media and even banks talk about for this month. September is not a good month for stocks. It's not a good month for gold. We don't know why. It's a mystery. Just like they didn't know why gold was going up when the dollar was going up as well. So what is sell season as we define it? No one's going to call it that except us and you. Sell season is mechanical. It happens every year, every year. It will happen as long as we have a tax year. It starts in September and ends in November every year. Sell season refers to fund participants, not market price. So sell season refers to there are people that must sell during this time frame. It doesn't mean the market's going down. It just means that there are sellers. And if there happen to be no buyers at that time, and there frequently are not, the market goes down. gold can go up during sell season. So let's read Bloomberg's uh, uh, comment on sell season. Oh, we'll come to that in a second. Bloomberg, quote, will gold's tailwinds be enough to overcome the September curse? Bullion has dropped every September since 2017. Over that period, the average decline has been 3.2% in September, easily the worst month of the year and far below the monthly average gain of 1%. It's a phenomenon that's perplexed economists who believe markets should behave more efficiently. And it isn't limited to gold. September is also commonly the worst month for U.S. stocks, with average declines of more than 1.5% in the S&P 500 over the past decade. Here's their chart. September is gold's worst month. Now, to be fair, they do it for stocks and bonds as well, and because it is in stocks and bonds as well. All right. What is this phenomena that perplexes economists who really don't study markets? They just study statistics. Okay, so what is it? From an interview with Daniela Cambone in 2020, there is a sell season and a buy season. Both are tied to investor flows. Both are known by the asset allocators and the banks. The banks know this. And both, in absence of an external event, are dominant drivers of market behavior annually. Now, this is from October of 2020. We have it. I have it. It's probably locked because years go by and it gets locked. I'm going to unlock that for you all. It's an interview with Daniela Cambone. But it's almost 5 years. Well, it's 4 years ago. All right. Again, just so you know, this is not all about everything that we know. There are other professionals out there that know this as well. The late, great Leon Tuille, in 2022, he put out a post, and his post was talking about seasonality in gold. And he was saying that gold is going to be a buy in November, December, January. And he was actually talking about January as being the month to buy gold. Now, I disagreed with him, and we had a conversation about this back then. But that's not the point of this conversation. The point is, everyone who pays attention to markets knows that it's a little bit blurry, a seasonality for gold. And this is September for 30 years. So it's a mixed bag for 30 years with long streaks, pro and con. But when you take September and October together, these 2 months historically are bad for gold. And the reason for that is people sell during September and October. And the reason for that is they prepare for tax season. But here's a meta lesson for all of you listening right now. And it reinforces something that you've suspected for a long time. And that is the mainstream media is years, not months behind true analysis. Therefore, you, the public that has learned to find alternatives to the mainstream media, are also years, not months ahead of the rest of the nation. So when gold doesn't go up for 2 years, or no one covers a story that you say, this is ridiculous, isn't it obvious to them? I waited 4 years for them to talk about this. 4 years. That's how many years. The concept of China using gold in oil deals with Russia, we reported that in 2017, 6 years. Now, aside from self-congratulating, the media isn't in the business of helping you. The media is in the business of making money. And they no longer go out looking for information. They wait for it to be fed them. And it's fed to them by their sponsors. Anyway, equity recap, we'll take care of that some other time. Moving on. The meta-analysis is this. You're right, but don't wait for someone to tell you. Politics, geopolitics. Okay. There are several things going on, but we actually lifted this from Bloomberg because it was pretty good. The U.S. is planning to ramp up pressure on Venezuela. It's drafted new sanctions against officials close to Nicolas Maduro after his disputed re-election, escalating the crackdown of dissent. Venezuela ordered as a counter the arrest of presidential candidate Edmundo Gonzalez. And Benjamin Netanyahu said Israel won't cede control of the border area between Gaza and Egypt, even after nationwide protests called for a ceasefire. Bottom line, zoom out a little bit. There will be a war in every letter of the BRICS. We've got one in the R, that's Russia, Ukraine. We've got one in the I. I know it's India, but let's just call it Iran, right? Or Israel, or you could even call it India if you want. That's the Gaza Strip. That's your Middle East war, right? We've got a war that's going to happen. If it does happen, it'll be total global world war in Taiwan, Philippines, Taiwan, Japan, that whole C, that's the China area. And the S is South Africa. That's the easiest to win, so we're not going to start a war there. But B is the most important one to the U.S. As the United States pulls back its global empire, as it withdraws its military might from areas, there are fights everywhere. And how we're dealing with that is one thing, but as the tentacles, I don't mean this in a negative way, but as the arms of the octopus withdraw our support to areas of the country, they have to fend for them. Areas of the world, they have to fend for themselves. But there's one area where we're going to extend our influence, and that's our continent. That's geopolitics. We need to protect our contingent nations, our contiguous continent. We need to onshore, we need to friendshore, we need to reshore. And how are we doing that? Well, we made friends with Argentina, right? Right. And now we're trying to colonize via oil Venezuela. And now we're also picking on Brazil, legitimately, by the way, for the lack of free speech. So Elon Musk is an ambassador of the US in attacking Brazil. Okay. We're going to get the BRICS off of the continent, right? Argentina is our Israel down there. Okay. The BRICS are going to be pushed out of Brazil if we have our way. The BRICS are going to be pushed out of Venezuela. Socialism is going to be pushed off of South America. That's what's going on. All right. Data this week. Big data week. You can chill out during the week and pay attention to Friday. All this data is important for the economy, but it's the Friday data that matters. And we have a big coverage of that coming out on how the NFP will factor into the Fed's behavior. All right, going back to the markets one final time. I don't really see anything compelling. Let's go to a shorter time frame here and zoom in. All right, so here we go. 1, 2, the first time down. See that? That's the market being bought violently. The hour closed. Forget it. They don't look at the hours. The hour closed at a long wick and it just zoomed up next hour. Right? Zoomed up, not zooming up. This is the market working its way down there. Think of it as an organic situation. The market has rejected these wicks and never came back. Rejected a wick and never came back. Made a high, left some wicks above, and now we've got buy it. I'll buy it a little cheaper. I'll buy it a little cheaper. Now the market is a living being probing to see how resilient the buying is down there. Now, there will be buying again. Assume that it was here, 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 lower lows. Assume that it's going to go below this line. And that if it's still in a bull mode where there's someone down there going, buy it, I want all the gold, then you're going to see a long wick, maybe approaching Michael Oliver's line. If not, we're going to this line. That's my take, and my position is a reflection of that. I am a perpetual bull on gold. But this is sell season, folks. And although it doesn't have to go down, odds are it's going to have a hard time going up. I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1-ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot. While we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1-ounce gold Cougarans
for only $60 over spot. And again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching.
Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.